Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So, there's a new Tesla bull in town, perhaps a Tesla hyperbull, who believes Tesla stock today is worth $3,369 per share, about 4 times what it's currently trading for on the stock market. So in today's video, I'll be reacting to their Tesla valuation model and their thoughts, which go out all the way until the year 2050. I'll also be sharing some more details about my Tesla valuation model, which also runs out multiple decades into the future. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. Here we are over on Financial Review. This Aussie fund may be world's biggest Tesla bull. The Sydney-based fund believes Tesla shares are worth 4 times their current value, but it's Holland's view on the electric vehicle surge that should get investors thinking. If Elon Musk's $1 trillion giant Tesla wasn't already the most polarizing stock in the world, then small Sydney fund manager Holland Global Investments might well tip it over the edge. Following 12 months of research that has culminated in a 144-page report on the electric vehicle giant, Holland's managing director and portfolio manager and their research director have valued the stock at $3,369, I wonder if that's a coincidence, dollars per share, more than 4 times the current level. For those of you wondering, this article appeared about a week ago. Tesla stock's done quite a bit since. And let's just take a pause here. I don't even. The valuation is based on Holland's 30-year discounted cash flow forecast. In a world where it can be difficult to see what's going to happen in 30 days, such a long-term forecast will be taken with a bucket of salt. What struck Chanticleer, I'm not sure what the hell or who the hell that is, but let's continue, is the potential surge in electric vehicle sales inherent in the valuation. Holland believes Tesla, with its entrenched first-mover advantage, is well placed to dominate the EV shift. But investors should think more broadly than that. As Benke points out, a car is the second most expensive purchase most families will make, and over the next few decades, families across the world will change the way they make these spending decisions, setting off a wave of disruption that deserves careful consideration. I like the term wave here. In fact, I've taken it to the extreme. I think a tsunami of disruption, a cataclysmic tsunami of disruption is just around the corner when it comes to electric vehicles. At the heart of the Holland thesis is a forecast that global EV production will rocket from about 4.7 million units in 2021 to 51 million by 2030. I think this is probably a little on the conservative side, but hey, let's continue. 136 million by 2040. Okay, we're going to talk about this, but let's continue for a moment. And a staggering 184 million by 2050. We are going to have to talk about this. Given the biggest year of annual car sales in history was 97 million, set in 2018, the forecast deserves attention. I absolutely agree. In terms of probabilities, I'm not ruling this out. It is possible, and we'll read the article more and see where they're going with this point. But I admit, I am a bit of a skeptic. Let's read on. Benke and Davies see 2 key drivers of the demand surge. First, the ban on internal combustion engine vehicles, which they expect to be in place in Europe by as early as 2030 and across the rest of the globe by 2050 as governments rush to reduce carbon emissions from transport. Developing world to drive demand. These bans put Holland's estimate of the global EV fleet at 1.97 billion by 2050, 24% ahead of, but not a million miles from, the International Energy Agency's forecast of 1.6 billion. Second, the developing world, particularly China and India, where Holland says rising income levels can push car ownership rates from about 17% and 9% respectively to 40% and 30% by 2050. Ownership rates in the developed world are between 55 and 60%. The hold-on view is that 1 billion new car owners will come from the developing world over the next 3 decades, and cheaper, smaller EVs, such as Tesla Future, well, we don't know what it's called now, the $25,000 car that people were previously referring to Model 2, until Elon put the lid on that idea on the annual meeting, will be their choice. Now, we've got to talk about this because, one, it is possible, and I do understand the reasoning here. This may actually play out. I don't know. I don't have a crystal ball. But I'm personally of the opinion that robo-taxis are going to negate the need for personal vehicle ownership for most consumers out there. Sure, there will be some exceptions to the rule, but I expect that overall it'll be about 10 times cheaper to use transport as a service, aka robo-taxis, aka when you need to go somewhere, you use a robo-taxi rather than owning your own vehicle. There's a million reasons for this. You don't have to house and store it. That means a huge amount of space can be freed up, especially in busy cities. You don't have to pay for insurance or maintenance. You've always got access to the exact model that you need at that time. Maybe you're moving stuff, so you need a bigger model, but most of the time you don't. So you don't have to chop and change. You don't need multiple vehicles in one household, etc. However, another way to think about this, even if robo-taxis mean less people are purchasing vehicles for their own needs, Tesla has stated that their goal is to replace around 1% of the global vehicle fleet per year with electric vehicles. If it was just Tesla, it would literally take them a century to displace all of the ICE vehicles currently operating on Earth if they're producing 20 million vehicles a year. So there's definitely possibility for the global vehicle market to scale dramatically. If people just go, you know what, I don't want this outdated ICE vehicle anymore, it sucks, there's no software, I can't update it, doesn't have any infotainment, this, I'm getting an EV. Or, alternatively, if there's enough robo-taxis built because there's a huge explosion in demand for total miles driven, which ARK Invest are predicting, then there still could be a scenario where there could be more than 100 million, maybe almost 200 million vehicles produced in a single year, whether or not they're being purchased predominantly by consumers or acting as robo-taxis or some combination. So this isn't out of the realms of possibility, but I still am skeptical. This demand surge will create immense supply chain pressures, one that the world has been given a preview of this year as lithium prices have spiked. But Holon is less concerned about supplies of lithium and graphite as it is about cobalt and nickel. Advances in battery technology that could eliminate the need for cobalt or nickel are likely to be important. Totally agree on this point, and I do actually believe that they will come. I think there's a lot of breakthroughs ahead in battery technology. It's still a very new tech, especially in terms of automotive, and I think that over time, as a lot of smart engineering brains work on this, and battery production scales up by multiple orders of magnitude globally, there's going to be new formulas and new solutions. Threats to thesis. Davey sees the supply chain crunch as one of the biggest threats to Holon's Tesla bull case. The other is the company's ability to make enough EVs to capture growing demand. I definitely agree on the second part. Tesla is already failing to capture as much market share as they could be were they just able to make those additional EVs. Holon has Tesla EV production rising from 887,000 in 2021 to 5.5 million in 2025. By the way, just pausing here, this is pretty close to my estimates. My bull case, I've got Tesla producing 5-point-something million vehicles in 2025 before surging to 34.2 million by 2040 and 41.7 million in 2050. So we need to take a pause here and talk about this. Now, I'm going to be honest with you guys, my Tesla valuation model goes out to 2042, and in my bull case, I'm actually around this mark. Now, there's a fairly major difference between my assumption and what these guys are assuming, and that is global vehicle ownership. I am assuming that Tesla captures a much larger percent of the overall vehicle market than these guys are, but we're around the same numbers around 2040, which is quite interesting. I haven't modeled out until 2050. I mean, I've done some really rough what if scenarios, but it's not actually in my Tesla valuation model, so we won't go there. By the way, guys, for the record, in the future, when it's complete, when it's ready to share with you guys, I'm making a lot of tweaks after Tesla AI Day. I will actually be posting my Tesla valuation model exclusively on Patreon. A few assumptions underpin this prediction. The first is that Tesla captures 25% of EV sales over the next decade as a result of its first mover advantage. Jumping in here, this is all but a done deal in my opinion, so absolutely fair. And the legacy issues faced by existing internal combustion engine manufacturers in chasing EV sales, including high debts, by the way, this is a huge problem. Aging workforces, a third of Volkswagen's employees are over 50, I did not know that, and the need to support the cars they will still have on the roads for at least the next 20 years. Tesla could further turn the screws on the internal combustion engine giants by using its industry-leading cost of production and profit margins to lower prices, which they will. The second assumption is that Tesla can use its modular manufacturing model to add production capacity at its existing factories, which they will, and they confirmed once again on their Q3 earnings call that's literally their plan, squeezing out 50% of additional capacity just at the Fremont factory when it's already maxed out, and the new ones it will need to develop. Greater scale pushes down operating costs further. Also true and a very big point. Holon has Tesla's revenue from EV software and energy product sales hitting $2 trillion in 2039, before leaping to $3 trillion in 2047. We're going to come back to this in just a moment. Free cash flow, which is tipped to be $9 billion in 2021, hits a staggering $1.4 trillion in 2050 under the Holon model. So these guys are at $3 trillion US in revenue, including energy, automotive, etc. by 2047. I'm literally at 3.007 trillion in revenue, not including the energy business, but including some Tesla bot revenue, which I don't think they're factoring in 2042. The other point of interest, they have Tesla breaching $1.5 trillion in free cash flow in 2050. I'm not going to give it away yet, guys, but I have Tesla exceeding this amount of free cash flow in 2042. Let's just leave it there. Benke says a key motivation for spending 12 months on the Tesla model was so the firm could show its investors why Holon is far from ready to take profits, despite Tesla's 800% rise since the start of 2020. The point is to think less about the valuation or the financial forecast Holon has come up for with Tesla, and more about the sweep of change that's possible if EVs accelerate at the rate it predicts. So I'm really curious what you guys and girls think in terms of the predictions here. You think it's possible that the global vehicle market will blow past 100 million, 150, almost toward 200 million units per year by 2050, given the fact that there are the rising billions, especially from China and India, who today don't own personal vehicles whatsoever? Do you think that this will actually happen? Or is there another scenario in which the need for personal vehicle ownership almost completely evaporates, but total vehicles produced every year could still get to these kind of volumes because there's so much more demand for vehicles anyway, because people using robotaxis and the total number of miles driven on planet Earth increases by an order of magnitude or more? And finally, what do you think of their belief that Tesla stock today is worth $3,369 per share? To be honest, I think they're probably onto something with this. That is kind of why I'm still buying Tesla stock with every spare cent. I really do see it as enormously undervalued today. Hope you guys have enjoyed this video, and I'll see you in the next one. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.